Hello, everyone. Welcome back to the Rational Investor School for Trader Development. Yay! We're back in class, and here we are. It sounds to me like we are live on YouTube. Better make sure we got that page up there. It's on one of these pages. I can never remember which one it is. There it is. Yay! So good to see that we are rocking that. Welcome back to class, everybody. And I think, yeah, there we are. I had to make sure we had the screen on correctly, but I think we're ready to go. We got James helping me out here, TA wise, in the classroom. I want to say good morning to everybody, James. Hey, James. There he is. Got a nice fresh cup of coffee here. We are now officially back sort of into class. We had to spend probably a week or two, and we sort of slowed down the class format here. This term, we're meeting once every 2 weeks. So I apologize, guys, if it felt like it took forever to get the program up and running, but we got a lot of you students, and I noticed even on the the question and answer document already. Next Wednesday's got probably about a dozen or so questions already for me. So we're going to be working a lot here together for the next 6 months, guys. So just get comfortable. We'll have lots of time to review everything. But we are sort of finally officially into school learning program material. Yay! Woohoo! So here we are, class 2. We're covering horizontal support and resistance and how to draw trend lines today. This is actually a huge topic. So you guys are gonna have lots and lots of work to cover and to practice over the coming 2 weeks. So you'll have lots and lots of material to work with, lots of ideas. So be sure to, watch this. This class might be a good couple hours, guys, because we do have a lot of material to cover. So be sure to go back and watch the class video, a good few times. Each time when we go to a new topic, probably get a new page for notes. And of course, hopefully you're all journaling like crazy through all of this. And you're going to have lots and lots of charts for your notebook and your. I would even recommend, it's not a bad idea to create sort of like a level 2 homework guide. And in the course curriculum, we do have homework questions, right? So there are going to be sort of mini assignments for everybody to be working away on through the coming week or two. And really the long and short of it here is you just simply have to go and find examples of this and add them to your notebook, add them to your log. Be sure to go back and make a specific note especially if I say something like hint, 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 probably on the final exam. If I say something like that, well, then for Pete's sake, you better make note of it. We are going to try and record this class video on the OBS system as well. So I'll be working a way through that, trying to make sure that it's all tickety-boo for you, maybe with a better screen resolution. Although I don't really think it's critical, and I did notice that most people they're fairly comfortable watching the daily briefs on the YouTube platform. So, if that works in that regard, these classes, YouTube classes should work. But I'll say we are trying to move towards the 1080p format. So just be aware that we are working away on this. All right, so we got a lot to cover here today. We might as well get started. As I said, you saw how we did this the introductory week. So when we're done the class today, I'll post the class video link here, and any specific references or anything that are outside of course material, I'll post in here. But I don't really think we really have anything this week to post aside, but nonetheless, if there are any other materials, references, I will post them in sort of this resource kind of format, the way Stuart set this up. So specifically, we are on week 2 here of this course curriculum document. Trend lines and horizontal support and resistance. We're going to talk a little bit, and these are, it's the reason why I'm going to teach this class together in unison is there's a lot of sort of different opinions about the two different ways of drawing lines on your price chart that are relevant. And people sometimes get these confused. So I thought it's important that we distinguish the difference between the two in this one module. So we're going to start off the beginning of this module with this concept called horizontal support and resistance. Sort of give you some, visual context of why this works and of the two different camps, which is more reliable for trade location tools. And then also sort of give you a working example. And you guys have all seen on the daily briefs and stuff, I purposefully have been keeping track of a specific horizontal support and resistance study on Bitcoin for this class. I specifically, and a lot of the charts that I keep up on the system, because I'm using this monstrously powerful computer, I am able to keep this stuff up and running. A lot of the charts that I have kept up and running are specifically for the class. So we're going to talk a lot about horizontal support and resistance, how we do the charts, what do they tell us, what is the application, and give you some assignments around this. And then we're going to, the second half of today's presentation is we're going to talk a little bit about trend lines. And, it's very important that we distinguish the two. There are sort of apples and oranges. One's really good trade location tool, other not so good. And we have actually very specific rules around the application of both the difference between a validated and a potential trend line. Hugely important that we understand the difference. And then also various different ways that we can use trend lines, channels, high-low support and resistance, and what are some of the basic rules around trend lines. And really what's important here is, what are you supposed to do if you don't have the criteria required for drawing correct trend lines? And this is where a lot of new people to trading fail, because price action doesn't quite cooperate with the nice, pretty trend lines that you're expecting. So you have to be able to be flexible and understand that there are different ways that professional traders use trend lines. And in a weird sort of way, we're going to equip you with a tool today that we're actually going to be using extensively in about a month's time. We're going to be using it so much it's going to drive you crazy. But nonetheless, might as well get introduced to it now and be able to set your charts up correctly now. Then that way, when we do get into Mr. Gann, it'll just be a walk in the park at that point. Okay. And then finally, we're going to finish off today's conversation with just a simple working example. How would you use trend lines in sort of, the trade management process? And I'm sure a lot of you have seen in the daily briefs and stuff, we've talked lots about trend lines. You probably use them. If anything, used today as just sort of a validation and sort of a touchstone. Make reference, take lots of good notes for the final exam so you can pass it comfortably. But, make lots of notes in your journals and your homework guides so that you can basically use this as a user's manual going forward, where you have specific definitions of all the different criteria here. Because these classes are so big, I don't know whether we really have the opportunity. I mean, there's like a couple hundred people in this class. I mean, it's just crazy. Well, no, maybe not that much. Let's call it 150. I mean, it's a big number. Anyway, shake it. I don't know whether we're going to be able to do too much interaction per se in class with in-class assignments. So at the very least, and considering also too today's topic, there's so much to talk about. Consider the in-class assignment just part of your homework, right? And if anything, mull around on this, work with it. Then, of course, next Wednesday's tutorial session, come ready to ask a bunch of questions, right? And that way you can get your biggest bang for your buck. All right. So without further ado, we're going to be specifically, and you have, in the course curriculum document, you have the link to it. We're going to be operating off of this slideshow presentation. If you're watching this later on, I think, well, once we get to the end of the program, the archive programs have both the school video and the slideshows on the same page. I don't know whether, this has been sort of like the first vetting out of this. And this is probably, ironically enough, this is probably the last manually taught level 2 program that TRI is going to offer. So because we just moved to the new website, things are going to be a little bit awkward here for, running these classes just to get us nice and acclimated to the new site. But all of this stuff should be easily available to you. Like I said, everybody's got a course curriculum document. The Google Slideshows. If you want to go ahead and I've already dealt with this. And keep in mind, you should be very, very busy from here on for a full 2 weeks applying the information that's taught in the previous week's module. So, starting, the first week, introduction, all that, I understand a lot of you guys were chomping on the bit going, I want something to do. Well, now we're into it. So really my advice is for the next 2 weeks, just bury yourself in horizontal support and resistance and trend lines. So we're going to be operating off of this Google slideshow, like I said. What it's covered, like I said, first part of this, we're going to talk about horizontal support and resistance. And the second part of today's presentation, all about trend lines. And actually, as a special treat for you guys, I actually added another mini module, if you will, to this trend line course offering that actually I haven't done in the past. And that's the irony with this school, is that every term I keep adding stuff. Like when we get to the GAN module, there's stuff in there that I never talked about, in years gone by. So it's all a bonus for you guys. And then, as I said, we'll finish off today with just sort of a simple, how does Brian, and actually I suppose we could probably even just change this to T, TRI, use horizontal support and resistance, trend lines in the trade process. Okay, so let's get to work. First things first. You've probably seen on your price charts, there's two very distinct ways that we draw lines on our charts. And that is, if I just take a very simple, just, clean chart, it doesn't really matter. If anything, because you guys are all biased to this, I'm going to pick a totally random asset. Let's go IBM. Nice random asset. You've probably seen people both, on the TradingView tool, like here's horizontal ray. You've probably seen people just draw, horizontal lines off of key pivots before. That's probably not totally new concept to you. And at the same time, you've probably also seen, you've probably done it yourself, is you've sort of drawn like, these angular lines. Well, very simply put, when you take this horizontal ray and you draw just this line right off of this level right here, and it creates this horizontal line, this is what we call horizontal support and resistance. It's just that simple. It doesn't have to be rocket science, but hopefully you can see the very distinct difference between a quote unquote trend line that I'm going to draw off of 2 points. And, so in essence, this is sort of my trend. And of course, we'll talk in a little bit about whether this is actually a valid trend line or not, but we won't go there right now. But hopefully you see how I had to have like 2 points here and I picked it and I drew a line that's on an angle versus this thing called horizontal support and resistance that only asks for 1 point on the price chart. And really the key here with this concept called horizontal support and resistance is what we're really trying to do is we're trying to just sort of mark where the market pivoted. The market was going up here and then something happened and it changed and it went down. I mean, it's just that simple. And, and a funny aside, when I was at my prop firm years ago, the old boss would say, he would always question us. He'd say, what does a price chart actually tell you? Is there anything actually relevant to a price chart? Is there anything important to traders about a price chart? Well, we haven't actually. Oh, well, okay. So before we get into this, we should probably help Stella out here. Stella's asking, and actually, you know what? No, I'm not going to answer that right now. James, if you want to help her, or if anybody in the class wants to help her, I don't want to get derailed. I should just continue on the conversation. I saw your question, Stella. It's a perfectly valid question. Maybe somebody, James, do you think you could grab just a screenshot and make me point like an arrow towards the place where the tutorials are listed? I'd appreciate it. Anybody else that's watching this as well, go ahead and do that. All right, so back to our story. The question here is, Nebraska used to say, what does a price chart actually tell you? And the most important and really what is relevant to traders. Keep in mind that traders, of course, want to try and buy. And then after they buy, let's say right down in here, they're expecting the market to move up, right? That's how you make money as a speculator. Buy low, sell high. Right? And then conversely, if I'm thinking that this thing's going to go down, right, I want to try and identify the highest point here. And I'm going to be maybe selling here and looking for the market to go down, right? I mean, that's basically a trader, speculator's life is, if we're shorting, we want to see the market move away from where we shorted. And if we're buying, right, we want to see the market lift from where we were buying. So the point of the matter here is that if you actually look at a price chart, as technicians, the only thing that matters to us is where the market stopped going up and started going down, and where the market stopped going down and started going up. And what I need you to think about here is IFPs. Anybody here? Let's see if people are paying attention to Brian ranting here. And Stella, let's see if you can answer this. Right? What is an IFP? Is anybody? And then this is where I see if the YouTube delay is still working. Oh, Alex, you're already here. I forgot. Alex is our TA for the level 1 program, so he's kind of almost like part of management here. So I thank heavens he got the question correct. So, and what is implied about this concept called institutional fingerprint? It must mean something, right? And remember, the public always loses money at this game, so it's probably not the public that's acting here. And if anything, the public's doing the exact wrong thing. But remember that concept of IFP, where literally somebody stepped in down here and said, wait a minute. You stop going down and you go up here. And then conversely, right up top here, somebody eventually said, and this thing took a while to slow it down, but somebody eventually said, no, 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 no. You stop going up and you go down here. So based on just that simple principle, is it worth us knowing these levels? I think so. Well, you also have to understand too, and of course it becomes even more important when we think about the way this sort of world works, like capitalism. Let me ask you this question and just be curious. You have two answers here, either the public or the institutions. It's just one or the other. Who do you think the capitalist system, the capitalist model, is actually built for? Does anybody know? This whole concept of like something like Forex. Who is it actually built for? Right. And this concept especially is relevant when we talk about things like Forex, and currencies. Right. And actually, I remember in years gone by, I used to use the British pound, B6, I think it is now. And we used to go through the whole wranglings, especially of Brexit too. That was such an interesting illustration of that. But if you think about the capitalist system, and keep in mind, right, that we really want to sort of we've designed and built this system specifically for the banks, right? There's the British pound, and like on the Forex system, right? It would be GBP USD. I think that's the Forex. I think they even have. Maybe if we go all, yeah, there we are. So these are typical Forex platforms, right? If we look at that image, right, that basically is the institution's playground. And so what we have to ask ourselves, and you see this very important pivot peak right here, is do you think it's an accident that the market was actually taken into this level? And what's really interesting is hopefully you can see that, gee whiz, the market actually was taken on a bearish pivot, right, into that level, and it turned. Then the market went down and went beyond it, but then notice it came right back to that exact same level. Then the market came back and then pivoted back up, and look where it pivoted again, right off that exact same level. So you have to ask yourself, is that an accident? Is that actually, is that purely chance that happened? Or is there maybe something bigger going on here? And remember, guys, we have to always remind ourselves that these platforms are built for the institutions. Could there maybe be somebody who has agreed that they are going to do certain transaction in the British pound at a specific level on a fairly regular basis? Does that sound like that's even remotely possible? And what you have to understand is, like, put yourself in the shoes of, say, something like I don't know, let's Johnson & Johnson, right? I sell baby shampoo. And I sell a hell of a lot of baby shampoo in the UK market, but I'm an American company. And that means I have to move money, all of the Johnson & Johnson baby shampoo that I sell into the UK market. Well, I report my earnings in US dollars, not British pounds. So that means that on a fairly regular basis, I'm going to have to be transacting a whole bunch of British pounds to US dollars on a fairly regular basis. And so the question ultimately is, does it make sense that, a company like Johnson & Johnson doesn't really want to have to get involved in the international, Forex market making mechanism? What they actually want to do, and we'll teach you this later on in the program, is they're going to go to actually what they call commercial hedgers. And they'll actually ask the hedgers to manage their book of currency exposure for them. And based on this image, does it make sense that maybe the British pound was brought back to a very specific level so that market makers could do business at a very specific level on a fairly regular basis? Does that make sense? You have to understand, guys, that a lot of this is extremely manipulated. Does it make sense? And let's just get some feedback here. I don't know how long the delay is here. All right, Jeff says yes. And it doesn't really matter what asset you're looking at. And in the course material, right, we happen to have here, this is the U.S. Treasury bonds. Right, this is a 10-year U.S. Treasury note. And you notice that, okay, here's a key pivot level, and gee whiz, here's a key pivot level. Notice they gapped the market up here, but boom, came right back to this level. Then they rallied it up back to this level, then took it away, then right back to this level. All right, then they brought it away, then they took it right back to this level. Then they zipped it up here, but then brought it right back to this level. Do you see what I'm talking about? How, in essence, the market is almost, they create a pivot point, and then the market is almost finessed higher and lower away from the level, but the market keeps coming back to the same level. Is that an accident? The answer, simply put, is no. Now, do you also notice, too, that when they bring the market into this level, it's not nice and polite, and it doesn't sit there just like, hey, look at me. I'm just going to sit here and give you all the time in the world to do the transaction at the specific level. Do you notice it just goes zing, zing, and get the fuck out of there? And then look at this one, zing, 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 zing. But even at that level, they just take it away very quickly. And then it come back, and then zing, zing, zing. They did it again. Look at this one, zing, zing. Get it into that level, do the business, then get it the fuck out of there. Do you see that? So the irony of it all is this is actually where the institutions are doing their business. Now, what I need for you to understand here is, why does the market only sit at this level for a very short period of time and then zip away? And the answer is that because this is where the market makers have agreed to do the business, whatever it's a major corporation, if it's a government agency or whatever. Are they going to allow the public to do business at these levels? And the answer is no. So what they'll do is they'll take the market into a level like here, for example, and then they'll zip it away. And of course, the public all goes short. So they probably now have their stop loss orders just above here. So now this quick zip into this level, as Alex just points out here, very well said, sir, this now becomes a liquidity pool. So they zip the market away, and the worst part about it is, like in the talking heads in the media, they're going to tout how horrible this thing is and how you have to sell it, sell it, sell it, sell it. Right? They sell it down to a level, then they put in a pivot, and notice that at that level, did they really give the market that much opportunity? Like the public to get in at that level? No, it's just down straight up. So same sort of thing. You know, the institutions, they're buying down here. Are they going to give the public the opportunity to get in? No. And now this becomes a liquidity pool, right? Some guys might even go short, long in here. The sad part about it is that most of the public probably buys up in here, and they just take the market down right back into that level, liquidity pool, whatever you want to say, maybe run stops, whatever. The guys that bought up here, they're dying 1,000 deaths. And of course, on this gap lower into this support line, what's the public doing? They're going, sell, 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 dump it, it's going to zero. Oh, crap. And they literally ran the market right into a support line. So the point of the matter that I'm trying to make here is, number one, we have to understand that when it comes to assets trading in the marketplace, the only thing that's really important, ironically enough, from a trader are these key pivots. You know, this is just simply where supply, in this particular case where my mouse is right here, where supply overwhelmed demand. That becomes an important level for us. Conversely, on the downside, this is where demand overwhelms supply. And think of that institutional fingerprint concept. So as a result, a lot of traders will just simply concentrate on these levels. Why? Well, it's because where the institutions pivoted the market before. Now, I would imagine as a professional trader, here's a really good example where the market zipped up into this level. The pro traders, right, they're going to hit that. They're going to short that. And you can see that this candle actually finished down here. Now, that doesn't necessarily mean that that they hit a home run. Yeah, it looks like the level was correct. A lot of guys, like going to talk to you about mountain and stuff like that, they might hit a level in here. The market slightly moves in their favor, then they'll just move their stop to scratch. And then if the market does want to continue on that way, well, so be it. They'll just get stopped out. We also see a lot, and think of Wyckoff. Are you guys familiar with Wyckoff? Did Grim talk to you at all about Wyckoff? Let's see if we can find you the Wyckoff image. Where is Mr. Wyckoff? Is he in here? There he is. Oh, there's a Wyckoff interview. Here we are. Here's Wyckoff. Notice, same sort of idea about horizontal support and resistance. And notice that as a trend gets going, and if you think, of course, about, thank you very much, Joshua. If you think about the whole concept, and James, everybody's popping them in there. Way to go, guys. If you think about the concept of trends, then what should end up happening here is if price did blast through this resistance level, then it means that fundamentally something has changed in the marketplace, right? And they're reevaluating the market higher. Now, what should happen here now, if you believe in the Wyckoff method, right, is just simply the market will come back and it will check this. And, in the level 3 program, when we start trading with the DOM, we'll talk about the parking garage. Have you guys ever heard me talk about the parking garage before? And the way, thank you. Jeff already knew that was coming, right? And the way that markets basically move in a very consistent, reliable fashion. So the point of the matter here in this particular case, right, obviously there was a key pivot here that business was agreed to get done. Some sort of fundamental event happened that changed the dynamic. So now on this pivot here, they're still going to bring it back to this level where supply and demand changed in the past. But now this acts as support, not resistance. So here you can see that exact same concept. So we had on this particular case, the traders and people that agreed to do business at this level, they did their business. Some sort of fundamental shift happened. The market broke out through the top here, and then notice this horizontal support and resistance level. Now, what was resistance now becomes support. Can you guys see that? Very important concept to understand. And I will wait. Do, 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 do. Hey, there we go. All right. So the key here is, right, we talked a little bit about this earlier. I'll sort of summarize this again. The idea is that these are pre-agreed upon levels that will be traded at repeatedly because it's based a lot on market making behavior. It's no accident that you see markets continually pivot around key historical support and resistance levels. Should the support or resistance level get taken out, then what you should see is, and this is what they call the Wyckoff check, is if this is indeed a bull market, we should check that horizontal support and resistance level. And if it's still a bull, continue on our way. And you can see in this case, we sort of stair-stepped our way higher. Now, in this particular case, you can see they came back to this breakout level repeatedly. Again, there was probably a lot agreed upon business to be done. They're not going to trade it at this level for long periods of time. What the market makers need to do, if they're going to do business for the big boys at this level, is they got to get retail, in this particular case, long up here so that they can provide liquidity pools back at this level, or in this case, short here. So again, retail provides liquidity pools for the big boys at this important level. So can you understand, for true Forex traders, and really a lot of traders in the market, horizontal support, I mean, look at this level right here. What do you think, guys? Is that a sick-ass trade level or what? I mean, if you actually went on your Twitter feeds and all that crap, right, and said, oh, I shorted this bad boy right at that mark there, people would be like, how on earth did you get that level? And the key is it's just a previous horizontal support and resistance line. So for the classic Forex trader, and especially a lot of the Twitter kids and stuff like that, I used to work with a gentleman. Actually, James, were you around when I did that interview with my buddy Grissom? I don't know whether James might have been around back in that day. But I used to have a buddy of mine, Gris, who used to trade with me at my old prop firm. And this is basically how he traded. In fact, we did a video on YouTube called the Gris Matrix. I guess you'll probably find it. Maybe what I'll do is I'll look before the end of the class and see if I can find that. I wonder how would I look at it on TradingView? No. Well, leave it with me. I'll see if I can find that. Maybe I'll have it available for you for Wednesday. I think I did it in Twitter, but I'm trying to. Ah, you already found it. Oh, you're so smart. Oh, thank you, man. So there you go. So that was back in. Actually, it was December 2015. Actually, that's not so bad. Oh, look at all of you guys found it. All right, awesome. So I did some fun videos with Chris, and this is why I love Josh. This is why I love working with James, because he's an all-star, total rock star. So okay, let's keep moving this bus forward. The next step for the professional traders, keep in mind this is just done off the weekly chart. Does it make sense, guys, that these are just nothing more than weekly levels? And now can you see the levels? And what's really cool about this is all of you should look at this chart. And if you drew a fib from this high back to this low, you should go, well, I'm big willing to bet dollars to donuts. There's reload zones down in here. And that's the great part about horizontal support and resistance and using this thing like the Gris matrix, is that when you have horizontal support and resistance line up with fib levels, oh my God, talk about trade location. It's just the sickest. And you guys often hear me talk about candle body highs and lows, right? Well, in essence, that's basically thinking about that horizontal support and resistance concept. Okay, let's keep moving forward here. The next thing I want to do, and I think, yeah, before we get into there, is I want to leave you with a fun assignment. Now, it's only going to be fun if this resonates with you. If this doesn't resonate with you, don't get too stressed out about this. But in previous terms, I have asked students to, quote unquote, trick out their charts. Now, what the hell does that mean? If we go back to, say, like the British pound, and you'll notice that I have a weekly chart. Does it make sense, guys, that, you know, how I did this? I'm just going to mark every single weekly pivot. And you see this sort of density of the lines? Why don't we make this nice and thick? Right? And since all of these are off of the same time frame, I think this is pretty important. So do you see how I'm doing this? I'm just going to take my chart. I'm going to start at the highest time frame possible. And I'm just going to simply draw, and, you know, for accuracy's sake, it's probably a good idea to have the little magnet button on here. And then that way you know that the levels are accurate. And it's important. Accuracy is really important here, guys. So as you're going through the process of what we call tricking out your charts, if you want to zoom in, look at that. See, and it fights with you if you're zoomed out too far. If you want to zoom in and really make sure, and here we'll do that because this is driving me nuts here, right? And make sure that these horizontal levels are drawn off the lowest lows and the highest highs. You saw, everybody saw how I just did that, right? That's sort of your first step. Does everybody see how I've already got the workings of a horizontal support and resistance model here for the British pound? Are you with me? You see how I'm doing this? And, you know, I would argue that every single major pivot that you see on this weekly chart, you can draw a line. And as I had said before, I like to call this tricking out our charts. So at this point, and let's assume that I've done all my levels off the weekly chart, and I'm feeling pretty good about everything that I've drawn. At this point, then I'm going to drill down to the daily chart. And what I would recommend you do is now take your horizontal ray, but make it a different color and maybe a different thickness. So this is going to be our daily reference. And you see that I'm going to do these off of yellow lines now. And I'm going to change the thickness. And I'm just going to simply go back. And now you notice that on the weekly chart, these levels didn't show up that well. But when I drill down to a daily chart, what ends up happening is I start to see these levels a little clearer. So does everybody see how I'm doing this off the British pound? I started at the weeklies, pointed out the big weekly pivots. Now I've drilled down to the daily chart, and I'm starting to draw the daily pivots. As I said, and does anybody remember what we call this? Because I will make specific reference. And I know a guy like Joshua and stuff like that. Rob, if he's in the class, man, you guys are going to have fun with this. But we call this tricking out our charts. So does everybody see how I'm doing this? I would recommend that you all take one asset. And I know a lot of you are going to do Bitcoin. If you want to do Bitcoin, great. Go for it. Tricking out the chart. Thank you, Josh. Right? The point here is I'm drawing all of the levels, right? And then once I've done my daily and I feel like that, and you can always do more, right? Rather than less. More is always better than less. You can always take it back afterward, but more is always less. Or more is always more. What? Hopefully everybody's understanding what I'm saying. So at this point, what I would recommend, and let's basically just talk a little bit about this. Let's stay focused, people. At this point, then I'm going to drill down to my 4-hour chart. For the 4 hours, I'm going to do the same thing. I'm going to take my horizontal ray, and you notice that the 4-hour levels jump out, but keep in mind, we're going down to the 4-hour chart, so we should probably change the color and maybe even change the thickness so that we can make reference, right, and compare them. So let's go off purple off of my 4 hours now. And you notice that like this line lines up. And this one that we just didn't see off the dailies. Does everybody see how I'm doing this? Is there anybody right now going, I have no idea what the heck he's doing. I would not be able to do this myself. And what did we call this? What are we doing to our charts? We are tricking them out. Now, I mean, you can, and the more you go back, the better, right? Do you want to go back 5 years and do all of these levels? Awesome. But hopefully everybody saw how I started at the weekly price chart and started with just some very generic levels. Could I have done a weekly level off of here and here? Absolutely. Could I have done one off of here and here? Sure. Every major pivot that you see, draw a line. Now, you notice when I zoom out to the weeklies, look how clustered this is starting to look out. And what you're going to find is that when you do your entire chart history, it's going to look like an absolute mess. That's why we call it tricking it out. In essence, it's basically painting the matrix. So, if you stand back and try and look at the matrix in one picture, it just looks like gobbledygook. But this is what you have to get to. So can I just get buy-in? Everybody, ultimately, their chart is going to look like this absolute mess down here. Yes, Brian, I'm going to make a mess. We don't want that, Joshua. We want every single line on here. Every single line is critical, but I haven't told you how to use this yet. Okay, so at this point, you've gone through, you've done your weeklies, you've done your dailies, you've done your 4 hours, and it looks like an absolute mess. Well, the key here, and keep in mind, this is how people day trade Forex and commodities, is if we now drill down to, say, like an hourly chart, can you now start to see the levels jumping out? Notice there's a big hole between this weekly level and this 4-hour level and the next 4-hour level. Do you see the hole in the charts here? That's a big ass fucking hole. Excuse my French. I can't believe I just swore. Did that come out of a porn movie? Is that a quote from a porn movie? Man, that's a big ass hole. Okay, now I'm just getting worse. I better shut the hell up. But does everybody see this hole in the charts here? This is the whole point of this exercise, is we're trying to find what they call, the lines all together, we call them clusters. But do you see, look at what they did right through here. Can everybody see this? Right? Super important. Can you see how they went up, doink, back, doink, up, doink, up, doink, back, doink, down, doink, up, doink, down, doink. Can you see how the traders are just having a field day through these levels, through these holes? That's what you have to learn. And, look at this action through here. Remember, these levels were drawn from previous, right? All these lines that you see were drawn from way back over here. And yet, look how the market respected these levels. Doink, 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 woohoo! This is what we call horizontal support and resistance. Now, doink, 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 doink. I'm going to leave off this part of the conversation with an illustration of how ultimately your chart should look. I do this study on the site and in the daily briefs. You've probably heard me make reference to it when I show people all the different MACD studies. That's a really good question. Alex asks, is there more significance the higher time frame? Yes. That's why it's super important to highlight in big the weekly levels, especially in Forex, Alex, because I know you're going to be a fucking monster trader one of these days, you crazy ass SOB. The weekly levels, right? This was a hugely important level here. And then the daily levels, one factor down, but still important. And then the 4-hour levels, right? Less significant, but still relevant. And so, yes, it's really important that, because keep in mind, Alex, when you're in a 15-minute chart, you're like, rah, 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 right? To be able to see this big weekly level and know that there was a big weekly level there, super valuable. So that's why I like a higher time frame, make them thicker, so that they're more significant, and then change the colors so that you can distinguish with what's going on. Okay, does that help, Alex? Super, very good question. Very, very good question. And also, too, think about who turns markets. Does it make sense? I've got this damn image running. I'm just staring at while I'm talking to you. Thank you, Joshua. Anyway, does it make sense that bigger institutions, bigger market players are going to move the market off of higher time frame levels? Does that make sense, Alex? So the important thing is that the higher the time frame, the level, the bigger the market participant had to be to put this, like this is a weekly chart, right? So there must have been some big ass market participants. And think of it this way too. I mean, this market was just tanking here, right? Brexit and all that crap, right? And somebody had to slow this thing down and actually put the bottom in and take it back up. This took some effort, right? This is not easy. In fact, look at this, right? They actually had to carve out a golfing bar off of this level, right, to actually put the bottom in. And even off of this engulfing bar, they still came down and attacked this level. So this is a huge level. And because this is a weekly chart, I wouldn't have a problem, Alex, if you went, well, that's a horizontal support and resistance level I should be making note of. And especially the fact that it was off of a engulfing bar, ooh, hugely important level. And that's an important weekly level, right? So now we actually get like a cluster. That's right. So in essence, somebody kept stepping in and buying this level. Somebody else asks, okay, so what does the hole tell us? Okay, so let's go to what a completed chart would look like. So, you know, here is this, and you guys have seen this chart on the daily briefs and stuff. I've talked to you lots about momentum. Here is that crazy tricked out chart. And this is the weekly price chart of Bitcoin. Everybody see my screen? Including Mr. Mind Blown. And keep in mind, we got a lot to cover here today. So I don't want to spend too much time just getting too mired in this. But can you see all the weekly levels that I've drawn on this chart in basically the dark color? And then I went down to the dailies, right? And of course, if you just leave it as it is, off of the weekly, it looks like an absolute mess. Remember, and I told you, I want your charts looking like a mess. That's the whole point of this. If you look at it from a higher time frame perspective, it's going to look like an absolute mess. So here is the dailies. And so I pulled up the daily chart. And this was in the teal, and I just drew levels off of every single daily pivot. Everybody see that? You can see the weekly levels. They're drawn off of the weekly pivots. You can see, you can often tell that it's a higher time frame level because the level won't be exactly on off the lower time frame. So you can tell that this was a weekly pivot because the line actually starts there because, you know, you drew it off of the weekly chart. But anyway, now this has the daily pivots on it. All right, so I have my daily chart all tricked out. Again, looking at this, it's an absolute mess. How the hell am I supposed to use this, Brian? Well, let's head on down now to the 4 hour. All right, so off of the 4 hour, and now you can see this is looking really clustered, and there's those higher time frame levels. They're way off the mark, but if you start zooming in and looking a little bit closer, right, and keep in mind we don't need to have volume profile. We'll do that another day. Now you can start to see, hey, things are starting. It still looks awfully messy, but can you guys see the air pockets here? And there's a big higher time frame level. Can you see how the market went and put this sick ass M top right off of that higher time frame level? Can anybody see that? So Alex, this is speaking to your desire to have, you know, why do you have the higher time frame level so thick? Well, you guys tell me. Was this an important reference to have on my charts? I think so. now, you draw your 4 hours, right? And we keep going. So now we'll go down to the 1 hour. All right, and this is what my 1 hour chart's now starting to look like. Okay, now, right, we can see there's that really important higher time frame level. You can see the air pockets, right? You can see the market like slams into a cluster, and this is what, now if you draw off of the daily and then the weekly and then the 4 hour, what you should see happen, because remember we said markets come back to specific levels to trade repeatedly over time. Think of the institutional players. They want to get business done at specific levels. So what you should see happening is what's called clusters. And clusters are in essence where you get a whole bunch of lines all coming together. So you'll notice that we had this sort of big higher time frame weekly level, but notice what happens when the market comes down into this cluster. Oh, we run into traffic. Notice we were sort of in free fall, especially through here. Look how we just zinged right down off of this cluster, snap back. And then we had to come back down here and play and play and play and play. Then finally lost it. So we have structural failure. Where's our next sort of, here's some higher time frame support levels. And again, think cluster. What's really interesting is you can actually see this air pocket right in here. Right? And then the market sort of zips down through the air pocket and then jumps right back up into the cluster. This is not actually the best way to use this. The best way to use this is now to go down to the lowest time frame. And keep in mind, a lot of day traders and stuff will trade off of like the 15-minute chart. And so here is that ultimate expression of that horizontal support and resistance study off of the 15-minute chart. Like, can you all see the very noticeable cluster of the different time frames? The market slams into this level. We hit this air pocket, and the market doesn't really want to be there. We end up consolidating, pivoting, and then notice the Wyckoff check. We come back down into horizontal support and resistance, and then take off northward. And then notice here's that massive higher time frame level. We slammed right into it and basically pivoted off of there. You see how we basically play ping pong between these higher time frame levels. And, like the day trader, right, the Forex trader, right, they're just simply going to be playing the clusters off of the intraday charts. And so, here's a great example. If we have this range and I have my tricked out chart, I can do things like draw fibs, because all of you guys are fib experts now. And you'll notice we've got a level right in here, 61.8, Mountain Man. And you can see we have a cluster of lines. And then notice, bit of a black hole, 78.6 happens to be off of this cluster of lines. You see how you can play cluster to cluster. And you might even argue, like I said earlier, well, I didn't say earlier, but I just drew earlier. We have this cluster here and the 50% level, right? And we could probably do a study going back up top. And here we have Mountain Man. We have a cluster, right? Market rallies into that cluster, doesn't want to accept up through this hole, and then gets whacked back down. Is it an accident that these levels line up with fibs? And I would say unequivocally, no. It's no accident whatsoever. So my big assignment for you guys is, can you trick out your charts? That's basically your homework for this week, is to pick an asset. And as I walked you through there, step by step by step, draw your higher time frame levels, then drill down to a lower time frame, change the thickness and the color of your line, then draw down to a lower time frame, change the thickness in your line to create this thing like we call the matrix. And then once your matrix is complete, and you can see that if I looked at this from like a daily, or we'll look at the dailies, right? This looks like an absolute mess, right? And anybody looking at this go, how the hell do you trade with this information? But do you see now how, for the lower time frame player, it acts really, really well at identifying horizontal support and resistance? And this idea of clusters. You think you could hunt for clusters? So what I would expect for Wednesday's class is everybody to come to class with a tricked out chart. No choice. Then I would like, because you all left the level 1 program understanding reload zones, I would like for you to now start thinking about, can I align clusters with reload zones? And does that make sense to further validate trade location? All right, Steve. Dennis says, and you continue to update as you move forward. That's right. Every single week I got to update this. That's how you get this absolute insane mess. All right, so that is our conversation about horizontal support and resistance. We talked a little bit about the idea of institutional fingerprints and who stops markets, and why we see horizontal support and resistance levels traded to repeatedly. It's no accident. What we have to understand is this idea of traffic areas, or what we call clusters. Then I also want you to be thinking about Wyckoff and market structure, and the way that markets can often move away from a horizontal support and resistance level. But remember, odds are market's going to want to come back and trade at that level again. It's probably going to be a liquidity pool. All right, moving on. And be sure in the tutorial, question and answer sheet to try this stuff, right? Just like Alex was asking, and Stella was asking, and I guess Joe R is asking. No cheating. I want to see everything done manually. We're not allowed to play with algos until we get to the end of this program. Okay, next topic. Trend lines. I'm going to say that for the purposes of this study, Cash Flow Jacques, we are going to concentrate on the actual pivots themselves. So that means the highest high and the lowest low. Now, remember, Cash Flow Jacques, you could change your chart to a line chart. And a line chart, most institutions operate off of line charts. Line chart will only have those candle body highs and lows. So as a fun assignment for you, Cash Flow Jacques, why don't I think you just volunteered to do one example of both. So I want you to pick an asset. I want you to do a horizontal support and resistance study off of candlesticks. And then I want you to do a horizontal support and resistance study off of clotheslines, which will be your candle body highs and lows. That make sense? One of the dangers of speaking up is that I might just add assignments for you. And all of you. It's not a bad idea that all of you do this. All right. Moving on, trend lines. Now, the second part of our conversation here is about not only the difference with using trend lines, but also how to actually identify a valid versus a potential trend line. And then also how you actually draw a trend line. So there's a whole bunch of stuff that we have to cover here. So the first is, how do you properly draw a trend line? And the great part about it for you guys is that you took all the level 1. So ironically enough, you already know the answer to this. It's just that most new people, and especially people that haven't taken our program, they have no clue about this concept called market structure. So the point of the matter here, and this happens to be a crude oil chart, is that if I was going to draw a trend line off of here, yes, this point and this point are connected, and this becomes a powerful resistance level. But we have to understand that it isn't a valid trend line until the market structure that identified this actually becomes validated. And where does that M become validated? Well, it becomes validated here. And that's really important. This can act as a support and resistance level, but in my opinion, it is not a valid trend line, i.e. the market is trending higher highs and higher lows, right? We can't call that a valid trend line until the market structure level that this is drawn off of actually triggers. As well, you can see that we have multiple trend lines. Keep in mind, you could have drawn a line from here to here and said that was the trend line, but it wasn't. Why wasn't it? Because this level was never traded through. And you'll notice that the market, yes, it painted this high. It came down against this low, which created a wedge, but notice this high here is higher than this high. So as a result, this as a market structure level has been invalidated. The market structure is this high to this high. Now, you could make an argument that if this high was lower than this high, then that trend line potentially was still valid. But as soon as the market takes out this high, this trend line becomes invalidated. It's gone. What ends up happening here is we actually get multiple trend lines established here. So within this broader framework, and they busted this high, so this broader framework, yes, we have a resistance line here. You notice the market didn't really get back to it. Notice then the market on this pattern itself went and validated itself here. I would argue until this level was taken out, this was the valid trend line. The market then took out this, and so now this trend line has been validated. So at this point right here, boom, this now trend B has now been validated as a valid trend line going forward. Then this level is taken out, boom, now trend line A becomes a valid trend line, or i.e. resistance going forward. But the problem here is that most people will just draw here to here off of this level, right? If I just draw this, we'll draw this as the trend line, but that simply is not correct. And the interesting thing is that the market never did validate this as a trend line. Support and resistance, sure, but not a valid trend line. I think we have also another example here. Down here. Now this gets tricky because you'll notice that this high here never did get taken out. And then notice that the market did actually take out this low. So this actually is a valid trend line. Until this level is taken out, it never was. But at the same time, you have to understand that really this is just, it's too steep. And what often happens, and I see this happen a lot with traders, is they'll draw this as a valid trend line, but that is incorrect. Why? Because this high is higher than this high. If anything, at this point, you can start drawing this as a valid trend line. And again, think market structure. Trend B. Oh yeah, look at that. Isn't that? Oh, that's the first time I noticed that. Thank you, Miguel. Way to go. Oh yes, that should say trend A, not trend B. You guys are terrible. But you're right. Now, notice that there is multiple trend lines at work here. There's this big trend line that's validated here. But notice there's also this little market structure trend line that's validated here. Until we actually break these lows, this is not a valid trend line. And the market is basically in a range and it's coming down to test this low. As soon as this level here is taken out, right, you can see the M up, and actually it should be down there, then up there, right? That took out that high, top of the range, bottom of the range. As soon as that was taken out there, boom, now trend B becomes valid. And I apologize, that should say trend A, not trend B. That's probably confusing the hell out of you guys. Sorry about that. Man, you guys are good at picking up these typos. I never saw that before. And that's the very hats off to you, Miguel. That's the first time anybody's mentioned that. And I wrote this years ago. So way to go, dude. All right. So, you know, the issue here, and especially in a chart like this, and we also saw this on Bitcoin, is, okay, well, Brian, the market's going zooming up here. I got to figure out some sort of trend line. If this has been broken and we're still chopping in here, there must be some way for me to draw a trend line even though I don't have market structure working. How the hell do I do that? And the answer is, and here's a really good example. Does everybody see how we went to a new high here? So, Brian, you said that I could draw a trend line if I have market structure. But if I do that, then what that means is that that's the trend line. It's an upward sloping line, but I'm seeing price come off here. I'm thinking there's got to be some sort of resistance along here somewhere. What do I do? And the answer is, if you don't have market structure to work with, and this is where we get into a lot of fun, I'm going to introduce you to the Gann square. Because what we have to do is we have to draw a 45-degree angle. Boom. If you do not have structure to work with, the answer to how do I draw a trend line is we have to apply, and actually here, you have to make sure that the scale is correct, and this is what drives people crazy about Gann, is we're going to go into here, and we're going to draw, and let's go, you want to make this a nice round number. So my advice is don't go off of like 0.2605. In this particular case, it looks like the market wants to go off of, say, 0.002. So if we do that, you see that it's slightly changed the scale. But at least now this is a round number to work with. And so what I've done here is I've set the scale to a nice round number, 0.002. The scale has been locked. So now when I draw my Gann square, and we want to use the square that's fixed, then that, and I happen to have gone in here, we'll set it, there's the defaults, it looks like that. What I need for you to do is go into TradingView, go to settings. I need you to remove everything from here. And if you have to go back and watch this video a few times to do this, by all means, go ahead and do so. So you can see I've basically clicked off everything here. The only thing I have left on this Gann square fixed study is the 1-to-1. Why 1-to-1? Because what 1-to-1 does is it just simply measures 1 unit of price for 1 unit of time. I'm going to say, you can see I already have 45-degree angle, but I'm going to go save as. And let's go RITE Q3 18 45-degree angle. So I've named it. I'm going to save that. And now when I go into any study, right, there's the defaults. If I go into TradingView and I want to just quickly draw a 45-degree angle, you can see I can, there was what I just saved. Boom, there's my 45-degree angle. There, everybody see how I just did that. It's going to take some practice, people, no doubt about it. No sugarcoating this. It's going to take practice. Jeff says yes. Okay, let's head on over to the Bitcoin chart. Same sort of thing. Actually, I don't want to do that one because it's a mess. Let's go over here. Well, the way that it was, you'll notice that in the menu here, when I left click on the price pane itself, you see it says lock price to bar ratio. And it says 0.002. All right, so let's see if we can give an example of a trend line being invalidated off of the British pound here. Here's a pretty good example. So you can see that the market put in this structure, right? You're going to work with me? Something like that. It actually confirmed the trend line there, right? The market structure. As long as this actually exists, this trend line is still perfectly valid and you want to leave it on your screen. It's totally fine. My hunch is, ironically enough, should this thing get its act together, this is now actually going to become resistance going forward. But the key here, just simply put, is that if I had drawn, I suppose you could argue, where's a good one? Give me a good one. Give me a good one. Give me a good one. Come on, good one, good one. Well, here's not a bad one. So we had here to here. And you say, well, Brian, if we go through market structure, that validates this trend line. So, yep, it's validated. And then they went, boom, and busted this. So as a result, this is not sort of the active trend line anymore. So do you see how that trend line got broken right there? At this point, this trend line becomes invalidated. Hopefully that helps. And really, one might argue, okay, well, the market came down and broke down again. Well, yeah, I would say, well, whoops. Oh, what did I just do? Fudgicles. All right. Let's try that again. All right. The fact that they broke the market this high, then this high, then this high, then this high, and then they finally broke down means that now this is validated trend line. And then you notice they came right up here, right? Major resistance, fight, 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 and bam, blasted through there. Now, the interesting thing is just because this has been an invalidated trend line, does it mean that it can't be support and resistance going forward? No. I mean, this can still be helpful for you in identifying support and resistance. But is this the valid trend once this is taken out, this level right here? I would say no. Hopefully that helps. Okay, so what I wanted to show you, and I think we did, but here's not a bad example, right? Brian, this looks really steep. If I do a trend line off of here to here, I don't know how usable that is. Come on, you. There we go. It's pretty close. Actually, that works. Did not break lower. Down we go. Valid trend line. Ooh, look how it respected it there. Not bad. And also, too, ooh, this is really good. You notice how when I drew this trend line, the market went and jumped back above this, but notice this slope was actually parallel to the previous trend line. Do you see how that happened? That happens a lot in markets. So clearly the slope of this needs to be respected. There's something going on here. And if we did actually further trend lines, we might even find that this actually plays itself out repeatedly. So like here to here. Not quite the same slope. Close. And of course, I'm just totally eyeballing this. And now I'm just making a horrible mess. All right, up to there. Pretty close. All right, so it's expanding a bit, but hopefully, and you will see this when you do these studies over time, that when you draw trend lines, you're going to see that the levels actually are sort of almost reflecting a kind of a matrix unto itself. Something along those lines. And you're going to see, I probably should have had this all ready before the presentation. I'm just sort of ad-libbing this. But you'll see that you're going to get high to low levels that point out previous trend line support, and you get these channels. And actually, there's a whole module that I could do, but I'm not going to go into it in this course. If I get time later on, I might do it. I haven't actually done this, and I don't even know if I can do this on TradingView. But there's a whole sort of school of technical analysis that just basically breaks markets down into grids. And it's quite remarkable when you do these trend line studies, how they actually form massive grids on the chart. So maybe as a fun assignment, later on today, I might look into seeing if I can have that up and running for you guys for the Wednesday session. Yeah, I don't think they have that tool here on TradingView. That's too bad. That would be kind of cool to show you guys. But anyway, I don't want to get too off topic here. Oh, weirdo, I just tried to undo that. Whoa, what the hell is going on here? All right. So let's get back on topic here. Brian's getting totally distracted. Difference between valid and confirmed versus not confirmed, valid versus invalidated trend lines. Think market structure. When you don't have market structure to work with, or say in this particular case, the trend line was so steep, it got broken fairly quickly. Like, how can I use, there's got to be some sort of trend line resistance that I can come up with. Think 45-degree angle. Hint, 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 definitely a question on your final exam. If you don't have market structure to work with and you want to draw a trend line, what do? The answer is 45-degree angle. Here's a really good example just off the 15-minute chart. Brian, there's got to be some sort of trend line here. Where is it? Especially when we're sort of climbing up here. And so the question is, how on earth do you figure that out? I like to set these scales at a nice round number. So when I see this at 3.00, I'm going to suggest to you that you change it to like a nice round number, like in this particular case, $10 for one. We're going to lock that. Now, my chart is squared. I'm going to go over to my Gann square, fixed, and I'm going to draw my trend line. And you can see off of this particular squaring, that was the trend. You might want to play with this a little bit, like, because you look at that and you go, okay, but how is that helpful here? if I change this scaling to say maybe half of that, let's change it to 5 to 1. All right, and then I draw my 45-degree angle. We should see. All right, that helps a bit more. Do you guys see how off of 5 to 1? Do you see how this actually corresponds nicely with price action here? So I didn't have a trend line to work with. I set my scale in this particular case, nice round number, 5 to 1. Now I've got a level that the market seems to be respecting. Does that make sense, guys? Do you see how I did that? Can you do it too? That will be the ultimate question. We could even say, hey, there's no market structure to work with here. How am I going to come up with a trend line? And you get that. Look at how that market rally peak was basically right on that 45-degree angle. Do you think that was an accident? And really, you could do this the whole way along here, right? There's no market structure here, Brian. What the hell am I going to do? All right, well, there is your trend line without market structure. Now that they've gone and actually put in a W here, you can draw, well, Brian, or this is a potential trend line. Right there. Will be validated if we break out through this. You can actually draw a validated trend line because this market structure has confirmed, right? Boom. So it's interesting how this market structure here was confirmed with the move through this high here. And that basically is just about exactly the same as this potential trend line. Do you think that's an accident? So without the market structure, use your 45-degree angle. With market structure, and quite often what we'll see happen is, can everybody see how this is now validated market structure? And gee whiz, what a coincidence. It's basically the 45-degree angle. Do you see the market structure here? Do you think that's an accident? The answer is no. Do you see how I did that, guys? Can you practice this too? Find an asset that has just basically a V bottom or V top. Practice scaling your charts. Remember, like I said, making a nice round thick number, right? If you start scaling your charts that you get these really odd numbers, then what ends up happening is as you scale out, the numbers get weirder and weirder and weirder. If you keep them as nice round numbers, and I would even prefer a nice even number, because when we start breaking 5 down, 2.5, 1.251, right, then we start getting into some really crazy numbers, 0.612, so point, well, whatever half of 1/8 is, right, the fraction. So if you keep them in round numbers like that 10 to 1, even 2 to 1 for that matter, when you start breaking the angles down even further, then we at least we have round numbers to work with. Yeah, like 1/16. Does anybody know what the specific number is there? It gets a little screwy. But anyway, the point that I would just make here is that try and have your scale a nice round number. I suppose you could argue 10, then half of that is 5, and there you're right back in the same soup. So, but don't go like, 10.123789, right? Or, 4.644783, right? Because then when you start breaking them into halves, it gets really messy. Okay, so we've given you a fun assignment. Can you square your charts and draw 45-degree angles? And then after you've done that, can you apply market structure principles and draw your trend lines using validated market structure. Okay, that's a big concept. It's going to take a lot of practice. You're probably going to have to go and do these repeatedly, maybe even do a half a dozen assignments. Now, this is where, and this is really important, guys. This is where the trend lines versus horizontal support and resistance lines debate comes into play hugely. Most professional traders love trading off of horizontal support and resistance. Kind of like I showed you, often you either get the tags and quick reversals, or it's a tag and it backs up a little bit or rallies a little bit and then continues on. A lot of professional traders love using horizontal support and resistance for trade location. My advice to you is do not trade trend lines as trade location tools that you just trade it off of the tag of the line. Because the problem there is most people in the public are going to be looking at exactly the same trend lines. And quite often what ends up happening is they end up as magnets, but as I've shown you a few times here today, they often get invalidated. So many people are watching them that you can actually have situations where market makers will move a market into a trend line knowing that the retail public is going to be taking the trade on the trend line tag, and then they just go and screw them over. I see that repeatedly with trend lines. Just be very careful. And the simple rule, guys, is don't just trade blindly off a trend line tag. Like, here's a really good example. You know, maybe you drew this trend line, boom, and boom, right there, right? And you see, oh, okay, well, Brian, look at the trend line tag. It produced an awesome trade level, but look at this one. The market came up. Yes, the trend line was extremely valued information, but actually went zooming beyond it. And then it came washing below it, and then back above it, and then back below it, and then it took off. And of course, our simple trade rule, Leanne James, is we cannot take a trade unless we see structure on the other side of the trend line. So, first and foremost, super important, don't get into the habit of trading trend line tags because you will get chewed up. And the rule is, if you're going to use the trend line as a trade location tool, you trade the market structure following the trend line resolution. Does that make sense, people? Critically important concept here, guys. In fact, look at this one right here, right? If somebody was trading this trend line, they'd be like, oh, that's an awesome trend line right there, right? Well, you can see the market actually went zipping beyond it. Yes, it was a very important level, but if you just traded that blindly, oh boy, you had some trouble there. Yes, important level, but just the simple rule, guys, is a trade to does not mean a trade at. Yes, you should expect the trend line to be tested. Perfectly valid, but it doesn't mean that you trade at the trend line, or you will get run over sometimes. The rule is you trade the market structure signal following the trend line resolution. Okay? Miguel says, don't trade off trend line tag blindly. They're exploited by market makers. Wait for a LJ setup. Wait for market structure confluent 5. Thank you, Miguel. Very well said. All right. Everybody should cut and paste that into their notes. I mean, everybody should. It's just that simple, guys. And if you need help, just head on over to the library. And where are our setups? Is it under momentum? I can't remember. Oh, I thought we had it in here. I don't see it in here. I guess you could argue it's the same as RJ. Isn't that weird how I had a whole bunch of other setup examples here, and for some reason they decided not to transfer them over. So, yeah, there should be an LJ in there. If I go back to the old website, I think we'll probably see it over here. Where are we here? Library. Yeah. Run trend line break. I guess we didn't call it the LJ specifically. Here's a really good example. Look at that. Can everybody see? You know, if you took a trend line tag here, well, I mean, hell, if you went short here, okay, fine. But wait for the trend line to be broken, then take the structure signal following the breakout. Really, really good example. We'll put that in there. Oh, look at that. You already beat me to it. Oh, you crazy guy. I love having these guys that already know what my brain's thinking. And then I think we also have this one here. Is that the same one? It might be the same one. Oh, it looks slightly different. Anyway, trend. And here, you know, here's a great example. Well, I think this thing was resolved. Never did go through this high. And you got bitch slapped. You know, here, well, am I going to short this? I don't know. Wait for the trend line to be broken, then take the signal, the structure signal following that. Yeah, this trend line here is validated on the move through that level there. And you could argue if this is a higher low that really we have a new trend line and a big ass trend line was established on this event right here. Okay, so the important thing coming out of here is just try and remember this, guys, right? It might be, I'm not quite sure, it should be. I'm just going to leave these up, and if they're not on the new website, I don't see it here, then I'll add them. I see Ron Jeremy. Let's see what we have here. Yeah, this is a good example of a trend line breakdown, market structure following the trend line break. Bullish one. So down trend line 1, 2, 3. Here's a great example. Don't take the trade at the trend line. Wait for the structure following the trend line break. Okay. Where should we go next? Let's put that away. Put that away. Okay, next on the topic, and this is actually what I added today because this is kind of a fun application of trend lines, and that is we can use you should be able to save charts, Joshua, if I just go up here. You know, like this is a brand new one. It's unsaved, right? You can see it says unnamed. I can save it any old thing I want. You can make a copy of it and then rename that. So hopefully that helps you, Joshua. Okay, so next topic. And actually, I even have this. Let's start off. We want to draw high to low trend lines now. This is slightly different application of the concept. But in essence, this is a great way to identify support and resistance on your charts. So how am I going to draw a high to low trend line? In this particular case, I've used Bitcoin to try and help you guys. Right? I've noticed a up move in the market. Then hopefully you can see a nice structural signal that confirms that that was a pivot high. The market moved higher, then the market came back down and it checked that pivot level. So now what I have is I have a pivot high, I have an oscillation, then I have another pivot high, and now I have a pivot low. And so all I'm going to do is I'm just going to simply draw a trend line off of the pivot high and the pivot low. And what this should do during bull markets, and you can see that this whole trend line is validated on the acceptance above this as a new pivot high, so right in here. What this is ultimately going to do is it's going to paint support for me going forward. So if we pull up that chart, which I think I have, yeah, right here, you can basically do this the whole Bitcoin rally. So, you know, here was our ultimate low, lowest low, lowest high. I could, quite literally, I see a pivot low. I see a pivot high. Really, all along here, all of these levels. I could do high to low trend lines off of these levels, right? There to there. As long as the market moves through this level, which it did here, that is a valid low to high trend line. I could do one here to here. That's not really the best here. Let's maybe even go off of here. There, oh, there's a good one. So pivot low to pivot high, validated right here on the break of this high. Pivot low, the lowest low of this move. Pivot high, highest high of this move, validated here, trend line resistance. What do you think, guys? Does that make sense how what I just did there? And actually, it'd be really interesting if we zoomed out on this to see whether the market actually ever even hit this. It might have. Oh, yeah. Look at that. Not a bad resistance level, eh? You see how I just did that? Low to high, pivot low, pivot high, broken and validated right here. Right? All right, get up there, you. Right there, validated resistance. And the interesting thing about this is this line even played a role there. And I might even argue that this is a perfectly valid support line now going forward, as well as this one. Now, I did these for the slideshow purposes. I just did these two smaller ones. Jesus, what a mess. What happened? Let's get rid of that. All right, I did these smaller ones to just illustrate this. So, market's going a little bit nutso here. The irony of it all is this is basically the SEC event. Can you see how that was a pivot low? Lowest low in price right there. The market rallied up to this high here and then backed off. So, pivot low, pivot high. This now becomes a valid piece of crap. Becomes a valid high, low, in this case, low to high trend line on this event right here. Now, the market zipped up here. It didn't hit this trend line, and then it backed off some more. You'll notice that this level did not get taken out here, right? So really all this is a trading channel. If you wanted to, on the break of this high right there, you could also draw another pivot high, pivot low trend line there. Perfectly valid. Both, in my opinion, are valid. This one, this smaller one, was validated there. This high to low trend line was validated on this event right there. Bottom line here is this now becomes very powerful resistance going forward. And what's really interesting about this is, of course, if the market can accept above this resistance level, now do you see how this became resistance here? But it also became support here, 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 and resistance here. So in essence, this line will probably act as resistance going forward. And probably, again, as I said earlier, with horizontal support and resistance, if this is ultimately the low, I don't know if it is or not. But can you see as sort of trade location, this now is starting to correspond. This would have been an awesome level to look for resistance. Now we're running out of time on this thing. So my hunch is this is losing its relevance. But bottom line here is this line now is significant resistance going forward. I also did another one, and this happens to be off of this one, where we can actually see, again, we've gone and asked, okay, I have a pivot high. The market pulled back, made a new high, then pulled back, made another new high. So now I have a pivot high and a pivot low to work with. And can you see how that pivot high, pivot low was very significant level even to today? Pivot high, pivot low. Support now becomes resistance, becomes support, becomes resistance. And you see how important that high to low trend line is. You can do this on almost any asset. In fact, what's really cool is when you have like penny stocks and like the altcoins that break out. You guys have seen me when I've done that like lumens chart, right? Have you guys ever seen me do that lumens chart? And I show people and they go, no way, man, there's no way that could ever work, right? But this concept works extremely powerfully. What is that? It's like stellar, right? XLM. We can do it off $1. Let's see what we get here. Actually, that's probably not the best example. XLM BTC. There we go. So, and I love to do it when I see these ones, right? Hopefully everybody can see. I'm going to do the even there to there. Should it surprise us when I just simply play connect the dots off of the highest pivot, right? And then the next highest pivot, wow, gee whiz, that's resistance. And the interesting thing here is that I really don't see any reason why we can't see this level traded to again. Yeah. So if you want to do, say, a high to low, right, we could do, where's one? Ooh, I like this one. I don't know whether that's the lowest low, but that's perfectly relevant. So swing low, swing high, paints that as a resistance line. Not bad. This one, it might be a little bit harder for us to do. We might actually go swing low to swing high there, which probably was not hit. The question is, do we go off of there or do we have to go off of here? And I'm not quite positive. If we go off of there, swing low, I think you're probably going to have to go off of that high. That's a tough one. But nonetheless, and really probably not the best to use that. Well, what's the example that I wanted to show you? Okay. Let's see. I hate when I ad lib this because it doesn't really do you guys any favors. Let's see if we can find a nice simple low to high. Well, I would even argue that well, believe it or not, that to me looks valid. If this is taken out, which it is. Really, we could even go, there's a few here. but I don't mind that. It's pivot low, pivot high, following, confirmed. Let's maybe just, well, our good old stalwart stock. I always like to pull IBM up. It's a nice, simple name. We're going to go weekly. Well, it's not bad. We'll go pivot low to pivot high. That's a pretty good trend line to use going forward. Wow, huge battle. And actually, even look how it's still relevant today. So we just simply ask, what is your swing low? What is the swing high? Level is validated right on a breakthrough there. And now this becomes basic. If anything, I would argue this becomes like the oscillation point. Overly optimistic, back to the mean. Pessimistic, back to the mean. Pessimistic, back to the mean. Optimistic, back to the mean. Pessimistic, back to the mean. Overly optimistic, back to the mean. Can you guys see how it did that? Back and forth, back and forth. We could probably do one for Bitcoin. I'm not quite sure why I didn't see it on that lumens chart. Oh, geez, we don't have that much history here. Well, I showed you a couple examples off of Bitcoin earlier. Really, I might argue, right? Here. Well, I think this is the one that I did for you earlier, right? There to there. Swing low, swing high, validated there. Optimistic, back to the mean. Optimistic, back to the mean. Pessimistic, uh-oh. Lost. All right, I don't want to spend too much time on that, but in essence, giving you a couple examples here to work with today. I'm not quite sure why that's not working. There we go. So see if you can find an example or two for the upcoming Wednesday's tutorial session. Trying to find this situation where you have a pivot high, then the market pivots up again, pivot low, draw it off of the high and the low, provide support going forward. In this particular case, pivot low, off of the pivot high, paints resistance going forward. Well, with the high-low trend lines, I'm not going to necessarily say that they are invalidated or validated. What I would just simply say is that they are really good sort of measures of the mean trend. You know, just say, here's a great example, right? Where, you know, there was the high-low trend line, and we can keep doing these with Bitcoin, and it gets a little scary because some of these trend lines are pretty flat. But in essence, this move had to be checked. Do you see how this acts as sort of like a mean, Andrew? Let's see, maybe some, well, even we can do it off of these lower time frames. Let's see if we can find one here just off the lower time frame. I don't want to lock the scale now. Let's go. We could even maybe do it here, there to there. So this pivot low to pivot high, confirmed here. You're like, holy crap, this thing's breaking out. Where could this thing go to? In essence, that becomes resistance. Never did get up there though. So let's see if we can do another one. Ooh, look at this crazy ass action here. Let's see. How would we do this one? Might even really, to be honest with you, mind you, this was broken here. but this would be interesting to see. Yeah. So we do a swing low. Now the question is this the swing high? I think this is a higher high, so we could go there. But technically, I wouldn't have a problem if you went swing low to swing high and just said, okay, is that in play? Getting the kind of the feeling that this was in play here. Right? That would explain why we ran into resistance there. And it would also sort of, look at that, eh? Boom, 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 boom. Wow, that's shocking. So clearly this was an important low to high trend line that you could have used going forward there. So have some fun with this concept. I remember actually the first guy that actually taught me this low to high trend line concept was back in like the mid 90s. And he actually showed me, it was so crazy. It was a stock. And actually, I think you can make the argument, right? Even like this, there, sort of paints this sort of parabolic move. And I think I actually did it off a log chart. Whoops, that's not what I wanted. Log. Yeah. Okay, so here you can see we go pivot high, pivot low to pivot high, and actually worked pretty well there, right? We could probably do this the whole way up here. Pivot low, pivot high. That didn't really get respected. We could go pivot low, pivot high. Yeah, I don't really like that. I don't mind that. That's not bad. All right, so have some fun with this concept, right? Where you're simply, and it's not a bad idea just to simply go back in time and just, big pivot low there, big pivot high there. How does this trend line play out over time, right? Wow, look at that. The double top breakdown actually came right on that line that I drew from way back when. It's incredible how powerful these are. They can be really, really sick tools. So does everybody see how I just did that one? Pivot low, pivot high. And that actually painted the actual double top breakdown of Bitcoin was right off of that trend line. It's just crazy, eh? Hey, caramba. Well, let's see what's going on here with, well, anyway, I won't get into questions and comments here today until after we're recording. So maybe Chiron, I'll come back to that. Okay, so next concept, next application of trend lines. We want to talk to you about channels. So sort of backtracking a little bit and talking about drawing your valid trend line. Remember, everybody, we said that, let's see actually if anybody is paying attention here. We said that a trend line is validated by what? What is it that actually validates a trend line? Anybody remember? There's something that validates a trend line, and what is it? Market structure! Way to go. You got it. Awesome. Okay, so with that sort of same thinking, right? We're going to imply this idea that a trend line does nothing more than it actually paints a price channel. The question is, how do you draw the channel correctly? So let's say, hypothetically, I wanted to draw a trend line off of this validated structure. All right, let's go say, and actually, I don't know whether this is really the best asset to use because it just went nuts. But anyway. And I'm going to go, well, even here. This low to that low is a trend line. Yep, perfect. We've had it validated through here. So yes, it is a valid trend line. How am I going to draw a channel out of this to try and figure out where price is actually trading in sort of the range? And the answer is I'm going to go up to my TradingView trend line selection box. And I'm going to come all the way down to this thing called parallel channel. And I'm going to then replicate that trend line that I just drew, boobity boo. But here's the trick. And this is where most people get channels wrong. Is you can see I've double clicked that and there is the channel. Now, the channel line, trend line. Now, where do I project this channel off of? And the irony, this is the true irony of this, guys, is that this trend here actually was formulated through this here. That's a hard concept to understand. Most people don't realize that this trend right here and this projection, it was already being sort of postulated as the market was doing this. That's the irony of all of this. So to actually draw a trend channel correctly is you have to go off of the market structure, which we've done. Then you have to take your channel line. Whoops. Okay, I'm just going to start over. You're going to fight with me? Boom. All right. So we're going to take our channel line and we're going to project it off of the previous, most recent peak or trough. So in this particular case, I'm going to draw my channel off of this high here. There is your price channel. Do you see how I did that? Draw your trend line, then take the channel tool, it has these two sort of parallel lines, and you're going to draw it back off of this peak. So if we go back in time and do some examples for you here, right? Let's go here to here, right? You say, well, Brad, they put in a bottom here and then they put in a bottom here. That sure looks to me like a pretty powerful line. What is the channel? Well, there's the structure. The rally peak prior to the structure is there. So that implies that this is the price channel. What do you think, guys? Does that make sense? Do you see how I did that? Hopefully everybody saw that. Now, one gentleman that I worked with last term, who was just absolutely, I'm not going to do pitchforks here today, Miguel. That's a completely different topic. One concept that one of our students really liked, and I encourage you to consider it, is you're going to, on your channel, create a midpoint of the channel. And this acts as sort of an oscillator of the channel. Can you see? I drew the trend line. I projected it off of the previous peak there. And now with the midpoint on, can you see how the market oscillates off the midpoint? Can you see that? Change that to like yellow. Do you see that? Which tool is the extended channel tool? I went up into here on TradingView, the second box down, and you go all the way down here to parallel channel. I've gone on the settings button and I've clicked right-clicked the settings of my channel and I've selected middle. So do you see, guys? I don't know. Does anybody see this? I mean, damn. I drew the channel off the original bottom, projected it off the high, and I mean, I don't know. Would that be kind of a handy trade location tool for you? It's pretty good to me. And then, of course, you can do this also for the bear, right? Let's do it off of this one. So I'm going to, I've identified market structure here, boobity boo. You can see where the previous move is. There's a bunch of them. There's that one there to measure this smaller channel. Right? Notice how I drew that off of that low right there, off of that tail, and it corresponds nicely with there, there, there. Okay, it even keeps going all the way down into here. You could if you wanted to, right? Well, Brian, really, I think the channel bottom is there, right? Because look at that. That's a straight line all the way there. And what do you think? Boom, boom. And how about the midpoint? Swing, cluster, swing. Look at this battle here. Do you think you could do this kind of study? Looks like Josh on board. Really, we could have done one off of here. This is where it gets really messy. Do you see how I did that? A year, eh? Well, patience pays off, dude. So at the moment, we look at good old Bitcoin. You hate to do this, but hey, spade's a spade, a spade. We got this here, boobity boom, to boom, to boom. I mean, that's technically the channel that the price is working within. I know nobody wants me to talk about that kind of stuff. Boo, hiss, hiss, boo. If we can start, actually putting in bullish structure here, we can actually start thinking about up markets. But right now, I just don't see much. Right? And then we could, well, Brian, it looks like there was structure down here. Well, you go boobity boop, and then you draw it off of here. And you see that actually the market rallied up, resistance, midpoint of the original trend, double top failure, back down. What do you think? You think you could start drawing some of these channels? This is what I need you to practice, right? I mean, hell, you could even look at this double top and say, well, Brian, sure looks to me like we could go boobity boop, boobity boop, boobity boop. Does that explain this move down into these lows? I think so. Market structure, project it off of the most recent pullback. There's one guy who teaches tutorials on the site, and he absolutely fell in love with this concept, Ian. He couldn't get enough of it. Just gobbled it up. I mean, technically, you could argue. I think that's a lower low, though, isn't it? Yeah, I don't see anything here that's validated, so no, I'm not going to put that on. Okay, so our next topic that we wanted to introduce you to was this idea of drawing channels. Everybody see how I did this? Boobity boo, A to B, trend line, projected off of C, paints this channel. This one, A to B, previous rally peak was here, paints this channel. Then in the downtrend, A to B, off of the previous low, paints this channel. And you can even have channels within channels, right? So we have this really big channel, and price is bumping along in here, and you're like, how the hell does the market get all the way down here? Well, you notice that there's this cute little channel inside the bigger channel. A to B, draw your trend line, project it off of the previous rally, and this gives you a channel within a channel. Here's a great sort of day trading one, boobity boo, off of the previous range, gives you really nice price channel to work with. Then on the bearish structure, failure, where's this market likely to go back to? A to B, draw your trend line, project it off of the previous swing low, which is there, paints this as an objective. And what you'll also notice too is that what once was support now becomes resistance. So this trend line and the channel is still perfectly valid. And now on the loss of this level, now you can see that this level, what once was support, is now resistance, resistance. Make sense, guys? All right, we've given you a whole bunch of stuff to think about here. It's not necessarily that there's a big difference in the pitchfork. It's just if I'm going to counsel you on how to draw the pitchfork specifically, I would rather have all the material all pre-planned and laid out for you. You notice that I introduced this high to low trendline module for conversation today. And frankly speaking, I probably could have done a better presentation of the high to low trendline concept because I sort of tried to ad lib there and I was like, no big deal. If we get into the pitchfork and I actually, start drawing the lines, I want to make damn sure I'm giving you exactly step by step definition of it rather than just half-assing it, XXLT3XX. That's my answer to you. Maybe on Wednesday's tutorial session, if you want to put a question in there, Brian, would you mind drawing a pitchfork for us the way that you perceive they should be drawn? And can you show me the difference between a price channel and a pitchfork? Then I'll be happy to do that. All right. Okay, so we're well over 2 hours today. I think I'm probably going to feel like I want to wrap this up here. So, we've given you, first and foremost, this concept of horizontal support and resistance. And we talked a little bit about tricking out your charts. We want you to find clusters. We obviously, higher time frame references are more significant. And we want to see where a whole bunch of lines all come together at once. We talked a little bit about the way you draw valid trend lines versus invalid trend lines. And what do you do if you don't have market structure to draw your trend line? We introduced you to the concept of the high-low trend line and how we can use this as support and resistance tool going forward for future forward price projections. We've lastly introduced you to the concept of drawing trend channels and using the midpoint of the trend channel as sort of a pivot. So to sort of summarize, previous support and or resistance can often highlight excellent trade locations, coupled with things like moving average trend confirmation in this particular case. And of course, we'll introduce you to this in our next module on moving averages, how we can use moving averages to validate trends. But in this particular case, we'll use a moving average trend confirmation tool to simply give us our bias of how we're going to trade. And then the two of them used in conjunction. You guys have often heard me talk about, and of course, like I said, in the next module, I'll talk about the institutional trend bias tool and how they use checks of the moving averages to simply get into the trade. In this particular case, we've done both, where we've drawn a validated trend line. We've used moving averages to validate that trend, and then checks of the trend line and previous horizontal support and resistance levels and of the moving average operate as excellent trade setup tools. So you could even argue that this is a classic momentum trade. We will teach you about the moving average systems in the weeks ahead, but just simply for the purposes of today, you can see how I drew the trend line off of this market, and checks of both the trend line and the horizontal support and resistance level act as excellent trade location tools. Can you see this? And if you can't, then reach out to either James or Raf or myself and explain to us why you can't see this. Horizontal level tag, trend line tag, excellent trade location. Horizontal level tag, trend line tag, excellent trade location. Horizontal level tag, trend line tag, excellent trade location. All you need to do now, I suppose, is just throw in a nice little indicator confirming divergence or some sort of momentum, whether it be volume or price analysis, suggesting that this move is exhausted, and you got yourself nice solid 3 reasons to consider taking a trade. Well, actually 2. So this is trade location. You can, in fact, actually, you can use the moving averages, but we'll talk about that in 2 weeks to validate, your indicator information. But just simply for trade location tool, just second to none. Fantastic stuff. So I want to see all of you, pull up a chart like this, draw trend lines, draw your Wyckovian study. Can everybody see Wyckoff at work here? Let's actually see if we can get some buy-in from people. Can you see the Wyckoff process here? Can anybody see the Wyckoff process here? Oh, James can. Cool. That's good to see. All right. So at least my TA's on board. That's good. And my level 1 TA's on board. That's good. All right. Couple it with the trend line. Couple it with the moving averages, which you'll learn in a couple weeks. And hopefully you can start to see the trade setup developing. So coupled with moving average return duration and tags at these 2 levels used in conjunction can often lead to excellent trade entries. So couple your analysis with kill zones, let moves into these zones at your levels, set up the trade. Take advantage of the public's very predictable activity. Remember, the public is also going to be drawing this same trend line. They're going to be seeing the same levels as you are. The problem here, of course, is remember, the sad part about it is if it's just the trend line itself, you don't know whether, the market's actually going to blow through the trend line. Here's a great trap, right? Somebody said, oh, I'm going to go long, and boosh, they got slammed. If anything, I love this kind of action where you get trade to the trend line, horizontal support and resistance. And then at this point, you're just simply like, okay, give me structure, any kind of structure. If it's a bullish structure, do it on the other side of the trend line. And that will mean that we accept it above this horizontal support and resistance level. If, however, the structure is on the other side, back side of the trend line, well, look for the market to dump. And sure enough, she dumped. All right. Really, I don't like the idea of chasing market action, right? I don't like the idea of buying up here. If anything, in this particular case, same sort of thing. I don't like the idea of selling down in here. Think Wyckoff. If I wanted to get short, where is the market structure to get short? Well, it is this level. So I'm going to use a counter trend rally into this level. And we might even argue that this is a reload zone in here. So we got trend line tag. We got horizontal support and resistance. We got moving averages. And my hunch is that's probably also a fib level. It works as a great trade location validation. So to finish off this conversation today, when used in conjunction with fib levels, volume profile levels, which we'll talk about in a couple weeks, indicator analysis, horizontal support and resistance, and trend line tags can be that final ingredient for you to take your trade setup. Just remember, a tag of a trend line is not enough of a reason to take a trade unto itself. Yeah, this is a lot of information I've thrown at you. What do you think, guys? So the first week back to officially back to school, have I blitzed you guys here today? I think so. All right, so why don't we leave it at that for today? I've talked to you guys for about 2.5 hours. So I think I've probably said my piece. Now what I need for you to do is I need for you to get in there, and you've got 3 or 4 different concepts to work today. You've got a lot of work ahead of you. I want you to come to Wednesday's session if you can with questions. What I would even suggest is over the next 3 or 4 days, right? Maybe even just spend the next couple days going through the videos and trying to find examples. If you can't make it to that Wednesday session, write your question down and I'll address it then. But we should have tons and tons of questions for Wednesday. Okay, guys, I think I'm going to leave it at that for today. I hope you enjoyed yourself. Thank you very much for your company. Thank you, James. Rockstar as always. I think the only thing left to say now is bye for now.